Amit, good to have you on ET Now. Thank you for joining us.
Thank you.
I guess my introduction was the question in itself. For those who always wanted to buy a piece of the McDonald's India growth story, should they buy a stock now?
Well, I absolutely think they must. Over the last 15 years, I think we've been able to build a phenomenal foundation for the business. In fact, today the QSR industry has taken off in India, and based on Euromonitor numbers, it's growing at almost 15%. It's already an $83 billion eating out market, of which about 18 or 20% is the QSR industry, about $15 billion. And with this $15 billion growing at almost 15%, clearly it's an industry to watch in the future.
Amit?
Amit, just want to, understand a little bit more about the rationale behind this merger. Is it just a backdoor entry to capital markets? Is that how one should read it?
Well, as far as we are concerned, we've consolidated some of our family companies. We had our holdings in different companies, and this gave us the opportunity to sort of put it all together. Westlife's already a listed company, and now Hardcastle Restaurants will be a 100% subsidiary. I mean, the important part is we are not really looking at raising any funds at this point in time. So, the fundraising is an opportunity that we have for the future. And given that, it's really more a consolidation than anything else.
Amit, so let me try and address some, important queries for prospective shareholders. Westlife is a promoter-hold entity, and
Correct.
It is illiquid. So
Correct.
how can potential shareholders participate? What are you doing to inject liquidity?
So this is all a step-by-step process. I mean, the first thing we did in 2010 really became licensees for McDonald's for West and South. I think that was a very important step. Number two, we've recently got the whole merger and the consolidation process in place. We are waiting for the government and regulatory approvals to come in. And once the approvals come in, then the next step would be to ensure that there's enough liquidity. Our firm belief is that investors should come in and exit the stock at their will. And it is definitely an objective for us to be able to create that. But I think that's step two. Once we get the merger process completed, that's when we will start working on that.
Amit, how much will be the book value of Westlife depending on the assets moving in this company post the merger?
Well, I don't have that number off the top of my mind, but I can tell you that today, obviously, this has just been done on Friday. So the market cap is about 270 crores as of today. Obviously, it does not reflect the correct pricing once the McDonald's business comes into Westlife. And I think, again, probably once the merger process is completed, I think the real discovery of the stock will happen.
So in terms of a timeline, when do you plan to hit the IPO market, or when do you plan to raise money by the FPO route?
Well, I mean, at this point in time, like I said, it's going to take 6 months before we get the consolidation completed. Probably once the consolidation's completed, we will start thinking about it. At this point in time, we are very happy that really we have no external debt in the company or very, very limited numbers. Also, we have good internal accruals, both of which are helping us finance our growth for the moment. Additionally, we've always maintained a decent cash balance because, when you are growing the business very rapidly, we believe that we must have a very solid financial structure that allows the company to continue to grow in good times and bad times. So I think once the process is completed, say in about 6 months, we will start working with, our bankers to see what's the next way and what's the right way to create the liquidity in the market.
Amit, we understand that a bonus issue as well is in the works. Post that, the liquidity in your stock is going to improve. How many shares will there be in total, and how much of it is going to be for public availability?
See, as a part of SEBI's requirement to ensure that there is 25% public shareholding, we had issued a bonus, and therefore 25% of the shares will now be available with the public once the bonus is completed. So, 75% will be the promoter holding.
Amit, I just want to get back to November 21st and the transactions that we saw, earlier. 3.9 million shares were traded on November 21st. Can you explain this transaction to us?
Oh, sure. I mean, that's an interstate transfer within the family, completely with giving the right notice to BSE and SEBI. So we were just moving some shares around, just as a part of the whole scheme that we have to submit. So that's really what happened on that day.
Secretly, are you tempted? after the lofty valuations of Jubilant Foodworks to command a similar market cap?
Well, I mean, it's not about that. As far as we are concerned, it's about finally running a very solid business. I feel that if you run a solid business, and I feel we are very well placed to take opportunity in this growing business, given that McDonald's globally is a leader in the QSR industry. I think for us, that is what is material. I think if we can provide the customers that we have a solid eating out experience, I think the rest will come on its own. So really, we want to ensure that
you don't need to worry about. But what's the kind of margins that you enjoy, say, versus your peers like a Jubilant, which is working at 18% or thereabouts?
Well, as far as we are concerned, you see, I call it the growth phase. I mean, and I feel that for the next 5 to 10 years, we will remain in investment and growth phase. So really, margins are something that I feel will evolve over time as well. In the McDonald's world, I mean, we take 4,000 square foot in prime retail locations, and this is 4,000 square foot carpet. So we believe that we have an all-day dining model, which is, right from breakfast and even 24/7, subject to, the law permitting us to do that. So we believe that given again our supply chain being backward integrated all the way up to the farms, we are very well placed in the future to sort of, build this business. And I feel margins will come along with that. In the recent years, we've done quite well with margin growth, and I think we will continue to sort of build on that over the next 5 to 10 years.
Put some number to that, Amit. When you say quite well, what does that indicate in percentage terms?
Sure, in FY12, the numbers that we've released, we moved from about a 10% EBITDA to about 12%. And, so that's a pretty healthy growth of 2% in a single year. In fact, even profits grew by almost 127%. So we are quite pleased with, the way the business has been responding to us, because we've done this while maintaining value for our customers. So, we are quite happy with that. So I believe that as we continue to get scale, as our supply chain continues to get more and more volumes, those volume benefits will continue to come into the business, and we hope in the future there will be margin expansion to that extent.
Amit, what about your FY14, trajectory in terms of revenue, margins, as well as profitability? Because when you say it's a 127% jump, I'm assuming it's a very small base that you're working with.
Well, I mean, before that we jumped another 200%. So, the number that we delivered is about 42.5 crores on a net profit point of view. So, also in terms of growth, we've been growing at 44, 37. So, very high digit numbers. And I think we will continue with at least the pace of sales growth. Obviously, margins cannot continue to grow at this level. There is no doubt about that. But again, for us, it's not about FY14 alone. Really, for us, it's about the next 5 years, which is going to be the important phase of QSR business in India.
So in the next 3 years, how many more McDonald's outlets do you plan to launch? Would they be franchisee models, or are they going to be self-owned?
So we don't franchise in India. Other than 2 restaurants that we had done in 2005, we don't intend to continue to franchise at this point in time. In terms of growth, in terms of stores, we intend to be quite aggressive. Between a 25 to 35% CARG is what we are shooting for. There is a stated goal that we had set in 2011 that we will double our store base from 125 to 250 by 2014, and we want to continue to push for that target.
Amit, at a later date, can McDonald's Global come out and pick up stake in your company?
Well, generally McDonald's likes to be a franchisor, and even if you look at what happened with Arcos Dorados in Latin America, McDonald's had sold the business to the current owners as developmental licensees, and at least at this point in time they have not bought any equity back into that company.
But if they would be interested, it won't be a problem with you, right?
Well, they'll have to buy from the market because, we don't really have anything by which they can buy it from us.
So Amit, for someone who's watching the show is convinced that they want to buy the Westlife stock, how long they should wait? According to Bloomberg, the current P multiple for Westlife Development is 960. I know that's irrational, that's illogical.
Exactly.
But for how long they should wait?
Well, as long as, once the merger process is completed would be the right time. Currently, as you mentioned, the liquidity is low, but we hope to correct that in the future. Obviously a 9 multiple for our business is very low because we are a high growth business. So, there is definitely potential is all I can say.
How will you inject liquidity? The only way you can inject liquidity is that you expand the equity base or promoters, they start selling.
So, well, we have some ideas around that, and it's a little too early because we want to get the merger process completed before we start thinking about that. We have good 6 months to worry about it. I can assure you that when we come up with a plan, it will be a solid plan. We are very clear that we want shareholders or investors to be able to come into the stock and exit the stock at their will.
What is the ultimate market cap you want to achieve? Currently it's 270.
Well, like I mentioned to you, our focus is really running the business.
Come on, every promoter wants the market cap to grow.
Well,
that's the entire objective of this exercise, isn't it?
To my mind, market is vanity and, cash flow is sanity. So I want to stick with that. As you notice, we've been very conservative, zero debt in the business. And, therefore, we believe that it's the fundamental right way to grow the business. That is more important to us. And I'll tell you, the rest will come on its own. If we continue to deliver,